Diane Lin, she's fund manager at Pengana Capital, having around about $1.2 billion under management there. Diane joins us now from Sydney. Diane, thank you very much indeed for joining us this morning. Let's have a look at, well, your thinking here, because we've seen Asian equity markets go down along with global markets. Do you think that sell-off has been warranted?
Yeah, definitely. I mean, Asia has always been a very high beta market. So if there's any uncertainty in the world about growth, and definitely Asia is the would take the you see the risks out of Asia. But the question is that we do feel the sell-off in Hong Kong and in China, in particular the Chinese companies listed in Hong Kong, probably for the very short term is a little bit excessive.
Well, let's have a look at what you're looking at in terms of your macro view here, because what you say here is you're cautious about equities in the short term, especially in these industry groups which are exposed to China, materials, resource and construction, machinery, etc., that sort of thing here. Why?
For equity generally in Asia, we think it's facing a major hurdle that is very much the global policymaker risks, I call it. So what it means is that we see austerity program being implemented in Europe, and the uncertainty about the tax benefit for payrolls in the US, and then the ongoing credit tightening from China. So as a result, the growth for next year will be definitely lower. But more important for Asia is that we see lower growth and lower inflation. And what it means is that the earnings environment is very unfavorable for many Asian companies, particularly for materials, the so-called upstream manufacturers, the materials, the resources, and the mining, of course. And the earnings expectation by analysts at the moment are still far too optimistic. So as a result, we are generally quite cautious on equity, and on top of that, we are cautious on sector that are still traded at premium simply because of their growth prospect from China. And China certainly is slowly is producing some risks for us going into next year.
Now, just let's go through some of your top picks here as well. I believe you've got MediaTek in Taiwan. Walk us through your top three here.
Okay, but I mean, having said all that, I say, I mean, growth for next year will be very difficult to get. How we look at portfolio, the fund investment into 2012 now, is we very much focus on companies that, number one, that could have some structural growth, and number two, and that could benefit from some cost reduction. And as I say earlier, because of lower inflation, your material costs will go lower. So first of all, we like the industrial companies. Many of them are traded well below book values, and they will benefit some cost reduction. And secondly, the major investment theme that could come out quite a bit of surprise for us is smartphone from China. And what we are seeing here is that currently China has a shipment for smartphones about 70 to 80 million. Next year, it's quite likely it could get to 100 million. And by the end of next year, China could be the biggest smartphone market in the world. And based on this, then we went in to select the companies across the region that could benefit from this theme. So like the handset makers in China, like ZTE, and some of the chip suppliers like MediaTek in Taiwan, and Spreadtrum listed in the US out of China, and even some of the component companies in Japan as well.
Yeah, so that one being THK, I think, isn't it?
THK is the odd one now, yes, of course. THK, we like it. We've been liking it for some time, is because it makes certain components for machineries. And there are only two in the world. One is THK, the other one is from Taiwan called Highwind. And we currently, and the company obviously is traded very attractive valuation and one-time book. And what we like about THK is that it supplies components to many machinery companies in China. So our investment thesis investing in the region is that you want to invest in set makers in China, but the component and part suppliers are outside China, because the Chinese companies need these quality parts to make good set products for domestic use and for export. So that comes
Diane,
into many of the parts makers in Japan.
Diane, thank you so much for your time and your picks there as well. Diane Lin joining us actually from Pengana Securities.